Hey guys, this is Bandit FX, and today I'm going to be covering a trade recap on gold buys that I took on March 22nd, 2021. This was a Monday. So, Monday of this week, we took gold buys in the Discord, and this is how it played out. So, basically, when we got on the charts, we were in a little bit of a consolidation on gold. Let me skip forward a little bit on a few 15-minute candles. So, at this point, we're now breaking out of a range, right? Our most recent resistance was right here. So this was our most recent resistance on the 15-minute time frame. It is a very significant level. It's been used as support before numerous times if you look back in the history. So um, at this point, we did break above this level. The reason that I did not take a buy position at this point is for two reasons. One, the size of this bullish candle. This is a very small candle, especially because it was the second half of the 30-minute candle. It really didn't push as hard as I'd like it, and it didn't have a bottom wick as well. So I was anticipating a little bit more of a retracement or like a retest of this previous level or this previous level before continuing up, obviously. So basically, I waited it out. I didn't take the trade yet, and this is how it ended up playing out. So we had this big bearish candle, broke the low. So now buys are invalidated at this point, unless we break the high of this bearish candle. So let me mark this out for you guys. Okay. So this is basically what we were waiting for on the 15-minute time frame is a break of this candle to enter buys. Obviously, there's a ton of clean traffic to the left, so mark this to the side right here. Now, let me skip to the next candle so you guys can see how this played out. So what we had here is a bullish candle form basically and retrace the full move of this bearish candle down on 15 minutes. So basically what we did is we looked at the 5-minute, we saw, okay, what's going on in the lower time frames, and we see that this massive 5-minute candle on the last part of the 15-minute candle shot all the way back up and closed basically at resistance. Now, at this point, I did not take a buy position. I waited for the candle high to break as I had on my analysis. So if you take a look at the next 5-minute candle, you're going to see that it shot right up. But this is basically when I took the trade. Is as soon as we broke this high, I was in the trade. My stop loss was below the 30-minute candle, which was down here at 1730 or 1731, I would say. So let me mark this for you guys. And if you take a look, I'm going to show you on the 5-minute time frame why this was also a valid level is because it was a swing on the 5-minute. This was a swing. So let's take a look here. This was my entry point. Stop loss is right here at about 1731. Actually, it was a little bit lower right there. So we entered the trade. Now, where was my full take profit? My full take profit on the 15-minute, obviously, I would have liked to see it go all the way up to this level, but I was still studying the past price action as we moved up. So at this point, I believe I closed 50% or 70% of the trade. Okay, yeah. So I closed 70% of my trade right here at 1737, 490 at the close of this 30-minute candle. And the reason for that is because if you take a look at the 30-minute time frame, this is a very significant level that we're coming into. You've seen basically this candle rejection right here at this level, which was a previous support. It's been a resistance. It's been a support here as well. It's been a resistance in the past. So this is a very significant level for a price to retrace. Also, if you take a look at, there's a couple things to look at are like something to support like confluence, right? So obviously we're making lower lows. We're still in an overall range on gold, but we're breaking the lows, right? So what did I decide to do? I took a fib just for the hell of it, drew it out. So now we're at the 618 level. So now we're basically at the golden zone. This is very, very known level for rejections. A lot of the times when the price will come up to the 618, you will see a pullback. So what I did is I closed 70%. I let my runner run a little bit. Not too long though. So if we take a look at the 5-minute time frame, let me fast forward this a little bit to basically the end. So I think I want to say like right here. Is this the end of the 30-minute candle? 1737 490. Okay, so this is where I close my full position. The reason I close my full position here is because we were actually at resistance at this point, and this candle, this 15-minute candle, is very small. Now, obviously, it could have continued, but because of what I was looking at, and this was a very tested level before, it's been support, it's been resistance. I didn't want price to come all the way back down to my entry and basically stop me out at break even for the remaining 30% of my trade. So we closed full position, and as you can see, price did move up a little bit higher. Could have caught a few more pips, but right after that, the next 15-minute candle broke the low of the previous two bullish candles, and price then continued down to my entry. So we secured the majority of this trade at a pretty decent price. We didn't get the full thing out of it. I think we, missed a few pips here, but let's see. Overall, I think we closed at about 37 pips when we could have caught 52. Okay, so um, we obviously we left a little bit on the table, but something you guys got to understand is you can't always catch the full move. You're never going to catch the full move. Um, it's always good to secure profits. Securing profits will guarantee that you're winning. There's no guarantee that your runner is going to run to the top of this range up here at 1755, all the way up here. There's no guarantee that it's going to come all the way up to 1742. What's guaranteed is that price was at this level when I was in the trade and I could secure profits. So what did I do? I closed the remainder of the position and I took the, I think it was a 1.3R trade right here. Yeah, 1.35 is what we ended up closing at, and we called it a day. It was the only trade I've taken this entire week, and it was a profitable trade. So I typically like to trade around news, and if you guys have noticed, um, we did have a speech at 9 a.m. on Monday, um, but I took this trade well before that. We've had another speech at 12 p.m. on Tuesday for the US dollar, which can affect gold as well. And then we've had a few red folders, another speech for US dollar on Wednesday. So yeah, I don't like to trade news typically, but because this was 3-4 hours before the news, I decided to go ahead and take it anyways. Took the impulse entry, secured profits, got out of the trade. Um, Now, what would I have done if price started to go against me, and why was my stop loss in the area that it was in? So, if price started to come against me right here, this is what I would have basically done. I would have closed 50% of my trade if, for example, if we broke the high barely and started to continue, as soon as this candle started breaking its lows, that means we're coming back into this minor range. So let me draw this real quick. So we had a resistance on a 5-minute time frame. Let me get rid of this. We had a resistance on a 5-minute time frame, and then we had the support, right? So if we were to barely break and then come back down, that means price is going to start ranging or possibly continue back down. So if price would have broken the low of this candle as soon as it came up and started coming down, that's when I'm going to close 50% of my trade. Because now this candle made a top wick, it rejected this level and is now coming down. Yes, it's only the 5-minute time frame, but you could still see various details on the 5-minute time frame. So this is where I would have closed 50%. Obviously, I would have let the rest run. If we would have started breaking below this candle or this candle, I probably would have closed the rest of the position. Reason for that being is because obviously, if we're breaking this big bullish candle's low, chances are we're going to come back down and retest the bottom of the range, which could stop me out fully. So there's no reason to take a full hit. You should your full stop loss should never get hit. You should always be managing your risk, always closing partials as price going against you, because you got to think about something. When you're entering a trade, you're entering the trade off of a specific set of information. You have a certain amount of candles to base your analysis and your trade off of. Now, when you start getting more information, you get another support formed, say a resistance formed right here. Now you have, you know, conflicting things to think about. So, yes, you wanted the impulse entry. It did break the high a little bit, but if this candle closes bearish, what makes you think the price is going to continue up? Now there's a less percentage chance of you being right on this trade. You need to close some of that risk. You need to get some of that risk off the table so your losses become smaller. I can guarantee you, if you start making your losses smaller, you will win more and more, um, and you'll become more and more profitable. Because although your winners, you can't control your winners, right? So your winners are going to go as far as they're going to go, and that's it. But as soon as you start coming down into drawdown, you start seeing new information that is basically going against your bias and your overall projection of how the trade's going to play out. You need to cut those losses as soon as you can. As soon as you have an invalidation, basically a reason that invalidates the trade, you need to just close 50%, close 70%. Take that risk off the table to avoid taking a full hit on the stop loss. Because I risk 2% per trade. If I would have closed 50% basically right here and then closed the other 50% when we lost or when we came down here, I would have lost a little bit over. I would say I'd probably lose about 1% total, right? So I cut my risk in half. But because we won this trade, I made over the full 2%. I made 2.6% or whatever it was. But that's the thing. You got to always make sure your losses are smaller than your winners. So let me know what you guys think about this trade, guys. Leave a like, leave a comment, and if you haven't already, don't forget to subscribe.